This is Eric Muathe with Muathe.com. I just wanted to take a couple of minutes here, won't make it too long, to discuss or to show you what I thought about some of the stocks that you mentioned. And the first one being JP Morgan. And honestly, like I mentioned in my email, I think this one, especially now that it seems to be trying to break out, this is a 2-year weekly chart, and it seems to have formed this cap and handle formation. Probably will discuss that, or if you need me to discuss that, you can always let me know. Stock is breaking out. The highest weekly close is somewhere around there about 40, just under $48. Stock's trading at 47.64. Let me take that off. But what you see here is a stock that is trying to move to new highs after it has been trading pretty much in this area for almost 2 years, under 2 years, and recently tried to move to new highs, could not maintain those highs, but has been basing here now. All right, so we have, after trading in this range for a couple of for many months, more than a year and a half, or close to that, after trading in this range, we are now trading here, short base, short resting period, and we might be wanting to take out this level here. To be very honest, I honestly think JP Morgan, if it moves above 48, if it moves above this line here, which corresponds to the highest weekly close going back to February of 2011, I think this one takes off, and it might not be looking back after that. And a reason why I think it's a good one, and it might confuse a lot of people into thinking it's not gonna rally beyond its current levels, is because if you take a look at the monthly for JP Morgan, you see that the stock in actuality is see whether I can, in actuality, this being the highest weekly close, about 46 and a half, is already breaking out. It's already above that level, above 46 and a half, which corresponds to breaking out to new highs right here. And you can see that is a decidedly new high on the stock. That breakout right there, which is where it's trading at right now, is a breakout. The stock is trading at the highest monthly closing, or the highest monthly price, especially if it closes above this or around this level. It's going to be the highest monthly close going back 3 years. This is a 3-year monthly chart, what we are looking at right now, and I can tell you that the stock now is the first requirement for an ultimate Muathe breakout is for the RSI on the monthly to make a 3-year high. It's very simple. You want the RSI on the monthly chart to be making a 3-year high, and this is what we are doing right here. So don't be surprised that JP Morgan continues to see higher prices in the 50s, 60s, 70s, or even 80s in the coming months. So that's a high right there. That looks pretty good. And then the next thing we need for the ultimate Muathe breakout is we need for one of the two MACD settings to make new highs. And here is one confirmation that we are now above the green line, confirming that we are now at 3-year highs on the MACD. And that's it. The Muathe breakout only considers two indicators, the RSI and the MACDs. That's it, nothing else. There's a trillion number of there's a multitude of indicators in the stock market, but that's the only one that the ultimate Muathe breakout looks for. Like you can see this here, I'm just showing you some examples of indicators that some investors consider. Let me make sure we get that in the picture here. Nope, I should do it the other way around. There we go. And you can see, like, even in this very list here, you look at there are many indicators: price, performance, volume, RSI, MACD history, PPO, DPO, CCI, ROC, ultimate oscillator, tricks, force indicator, William percentage, full scholastics, slow scholastic, fast scholastic, store RSI, on balance, volume accumulation, Chaiken oscillator, Chaiken money flow index, PVO, uh, whatever, Wilder's DMI, average true range, Aaron oscillator, and this is just a sample. There are so many indicators, but the ultimate Moore breakout only considers two: one, the RSI, and two, the MACD. Done. You're done. You don't have to look at price to ratio. You don't have to look at no fundamentals. You don't care. All you need is those two things. If they're making a 3-year high, stock looks good. So right now I'm saying JP Morgan. I would even be a buyer, or I would recommend JP Morgan. That's going to be the first time I could be able to have done that over the last 3 years. So JP Morgan looks good, and I think it might even be seeing higher prices. Let's take a look at the other one you mentioned, and this one also surprising to me. I know we are playing energy, so in a way I'm not surprised, but this is Exxon Mobile. Had a nice run from July of last year, give or take, somewhere around here. Nice move, and here we are trading. We've gone as high as 88. So hey, as for one of the biggest big cap stocks out there, if not the biggest. I think at one point it was the biggest. I'm sure definitely top 10 market cap stocks in the market. Move from 56 to 88 is a big move. Okay, and here we are trying to break out again, and the buy point on the weekly chart is going to be somewhere around $85.30. 85.30 would mean that if it moves and closes above this level on a weekly closing basis, that's going to be a fresh breakout, just like we had a fresh breakout here. All right, after 2 weeks of rest, we had a breakout. So here we are, we've been resting for about 6-7 weeks. If we close above this line, that's a fresh breakout. But what is even more interesting about this chart is where the RSI is on the stock. So let's take a look at the monthly RSI for JP Morgan, for Exxon Mobile, and Exxon. And here we are. The monthly shows that we have at least 1 month of rest, as of it closed lower in the month of March. And if it comes and closes anywhere above this green line, which would correspond to the highest monthly close in February of 2011, if it moves above this level, and if it breaks out of this range, that's going to be a fresh monthly breakout. Fresh. And that's suggesting that we could see higher prices in this stock. Do not be surprised to see this stock have another solid run for a couple of months. Now, again, more importantly, the stock is trading very close to a 3-year high. Right there, 67.97. So any surge in this price is going to bring the stock above 69.10, and that's going to suggest that the stock is going to be at its strongest technical strength going back at least 3 years, and that's huge. All right, so this one again is just probably beginning a rally. Now if the breakout fails, then maybe the stock is going to pull back and consolidate for a couple of weeks or a couple of months. But for now, any breakout will suggest this stock might have unbelievable momentum to the upside. Now the next thing we look at is we've looked at the RSI. RSI looks like it's close to a 3-year high, if not already at a 3-year high. For all intents and purposes, it's at a 3-year high, which is one requirement. And the second requirement, we want at least one of the MACDs, and we already see that one of our MACD settings, one setting is the 493, and the other setting is the usual setting, which is the 12.26.9. But we see that here the stock is already trading at a steep premium to the prior level, so it's at a new high. So that by itself, this stock moved to a new high somewhere around here, and no wonder it has been on fire. So this one, Exxon Mobile, I'll be honest with you, the only reason why I would not recommend it to Mwathe.com subscribers is just that it's a huge market cap stocks, and in percentage terms they don't move much. But if you're managing money for people and you want some kind of safety, um, and some reduced volatility, this is a way to go. Exxon Mobile definitely looks great. I don't know how else I can put it. So the two stocks you mentioned on that you probably reduced your exposure or sold altogether. The odd thing is now they look like they are ready to move and move in a sustained, powerful motion. Now let's take a look at another one stock that you mentioned here, and it's a great one, but not. It's a great one going back years ago. Um, Microsoft has been a laggard, and in fact, if you take a look at Microsoft going back 20 years, the stock was good in the 90s. This is when you wanted to own Microsoft, all right? In the 90s, this was a powerhouse. I mean, this was an unbelievable mover. But since then, stock's been basically trading water, just churning and churning, collecting nothing but commissions for the brokers and going nowhere. With all due respect, Microsoft is nothing but a waste of money. Microsoft is a waste of money, in my opinion. Stock ain't gonna do nothing but just churn around, churn around. All these movements in the 90s were exactly what the ultimate mother breakout looks for. But if you take a look at the 3-year monthly for Microsoft again, you'll see stock is such a disappointing stock, be honest with you. The RSI is nowhere close to a high, and the MACDs are not even close to a high. So Microsoft to me looks like a stock that's pretty much is going to be trading in a range, dead money at the best. Little move here and there to the positive side if the market does well, but honestly, no, it's not a good pick. TGT, Target, again, I really like to own them when they're breaking out. Here, stock could bounce, but as far as I can tell, I don't like it because it's almost very close to a 52-week low, which would mean if it breaks this 48 level, this level here, it moves to a 52-week low. I don't like that. Stock looks weak. Chart's not. Um, the chart is not what you want to see. It's not giving you what you want to see in a great pick. It's not there. If it breaks out in the future, maybe, but for now, if it breaks out above $60, I might consider it. But for now, it might recover. But in terms of percentage gain, in terms of making money now, big chunks of money, this one is not looking good. Target, even at this level, is 50.96. Don't like it. I think there are better ideas out there in the market, in my opinion. With all due respect, of course. And if it goes on to do great, that's awesome. But as far as my unbiased analysis tells me, it's dead money at best. Again, HPQ, Hewlett Packard, the same thing. Just chart don't look good. Just last week was very close to a 52-week low. Those kinds of stocks are not the ones you want to own in your portfolio. If you take a look at Hewlett Packard, even let me go back about 20 years, just see it was a great stock probably in the 90s. Yeah, see, it came back 05 to 07, had a decent run broke out from about 23 all the way to 50 something. Again, that took about 1 year. Wait a minute, it took about 2 years to move from 23 to about 50, so about a double, less than a double, but it's close in about 2 years. It's not bad for a large cap stock, but then again, I believe your money can do better elsewhere. Hewlett Packard again is one of those how can I put it, heavily traded, heavily owned institutional stocks, but that really at best might give you a double-digit return and nothing else for the year. Don't like it. even if it recovers from current levels, it's still going to be underperforming the true leaders in the market. And the true leaders in the market tend to be unknown small cap stocks. Take a look at another stock here. And this is a TLK. Just going through the list one by one. And again, same scenario. Don't wanna bore you with this. I mean, it's not bad. Stock could be resting just like it was resting. It is right here resting, and it could be this. It could do the same thing it did here, which is move from about 32 to $10 or $11 higher. I mean, that's not impressive at all. Some stocks will do that within a week or two. So again, not the worst pick in the world, but I think I could push my money elsewhere. Let's take a look at PNG. Again, another very popular name. And this one is not bad looking in the sense that it could break out above 64. It could look to break out here at some point, especially if the market is in a breakout mode. It could break out above this level here, which is the highest monthly close going back 2 years. If it breaks out above that level, that's not going to be a bad mover. But a stock that made a monthly closing low of about $44 March of 2009 and has traded as high as 66, I mean, that's $20 give or take. That's a poor performer. That's a 50% gain when some stocks are up 2,000%. That's horrible. And I don't think it's gonna do much. I think it's dead money. Honestly, if I look at a 20-year monthly chart, I suspect I'm gonna see again. I mean, stocks been basically trading in this range since 2004. It ain't going nowhere. Again, you'll see it was at least it was had a better run in the 90s here. And this is when it met the minimum requirements for a mother breakout. Now, it's just dead money, period. I mean, for all intents, if you look at it, it's just been trading in this range. This is the high and this is the low. It's been trading in that range for almost 7 years. It's unbelievable. That's dead money, man. I don't think it's gonna do great. If you're looking to have some decent returns on that one, it's not gonna happen. In fact, if you're looking for a retail stock, and I might just mention a few. BK, I looked at this one earlier. It's not bad. It's not the worst. It's not bad, but again, the reason why I wouldn't own this one right now is because the financials are not really on fire. But this one is better than the Microsofts, the Targets, and the HPs, just because at least it's basing. It's still in a base, and if I look at let me look at it from a 20-year monthly chart to give me an idea whether it did have a nice run again in the 90s, but the stock's been trading between 40, 45 and say 17 for the last 10 years. It ain't going nowhere. It's just gonna be in that range. It might have a run if it breaks out. It might have a run to 44, 45 to these highs here. It might have a run to this level if it has momentum. I wouldn't really. I don't know. I don't like it just because it's not done anything. It doesn't give me a history of doing anything over the last couple of years, 10 years going back, 2000 and in fact you can stretch this all the way to 1998. Stock's done nothing other than trading this huge range. It's been trading here over how many years? That's unbelievable number of years, almost 13 years. what 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 makes us think it could do any different right now? I don't think so. I don't think it's gonna do anything other than disappoint. At best, it could have a short-term rally, just like it had a rally here, broke out here sometime in '05. Let me show that. It broke out here in '05 from about where it's trading at right now, about $30, and had a run to about 747. That's less than a 50% gain in 1 year. That's poor. I think in the 2004-2007 area, I remember we were owning stocks that were up 400-500% in 12 months. In fact, sometimes even more. Sure, we had some losses, but I'm saying we had a nice rally in the market. That's why the stock was up. But in terms of outperforming the market, this one is a loser. And I really don't see how it's going to change. And it's not bad, but it doesn't have a history of doing anything, and I don't think it's going to change. J&J, pretty much the same scenario here. These are large cap stocks that pretty much tend to be defensive plays in a bear market because they don't go nowhere. But if you look at them, this is a 2-year weekly. Stock's not breaking out. It's even closer to its 52-week lows. It could eventually break out above this level here if it's lucky. That could happen, but you can see it's been trading in this range for the last 3 years. This is a 3-year. It's been trading in this range for 3 years, and I'm sure if I look at it from a 20-year monthly chart, I'm just gonna see nothing but choppiness, nothing else. It had another run in the 90s when large caps were on fire, but stock's been trading in this region here going back 10 years. Again, 10 years. Yeah, it's between 45 and 60, $20. That's dead money to me. But if you take a look at JP Morgan and Exxon Mobile, those two to me look like the ones that should be owned, and the rest of them, if you ask me, need to be liquidated. Now, we were talking about P&G in the retail space. Let me show you some stocks. Just quickly run through some stocks that I have been on fire. And let's take a look at Lululemon. Okay, from a weekly chart, here it is. Let's take a look at monthly chart. The same retail space, but here's Lululemon. It's moved from about $5 to 95 in about since 2009. This is a winning stock, man. This is no joke. So why own stocks that go nowhere when we have opportunities? Look at a stock like Dillard's, right? We've all spent money there shopping once in a while, but look at the gain of the last 3 years, from $2.50 give or take, $2.50, all the way to $42. And multiple breakouts, like you had a breakout in February of 2010, breakout late last year about October, and all those breakouts are very productive. So stocks are doing good. I don't see why we would want to own stocks that are not on fire. Let me think of another one. Even a simple stock like Crocs, makers of those ugly shoes, even they've been on fire. Here's Crocs. I remember we were buying Crocs for Moather.com subscribers here in March under $2, if you can believe that. Actually, I think the buy signal was when the stock was breaking out above $1.33. If you can believe that, I remember we were buying the stock when it broke out of this range, 2000. We were buying the stock here when it broke out above $1.33, and I'm sure we don't own it. I think I sold it probably somewhere in the five. I sold it somewhere here. Good return, almost fivefold. That's so had a great return. But had we held on, we would have seen the stock return about 19-fold. So what I'm trying to suggest is that there are many other stocks in this market that are doing well. I don't see why we should necessarily burden ourselves with popular names. This is what I'm saying is we need to change how we invest and see whether we can look for minimum requirements that make us buy only the best looking stocks. This is Eric Muade with Muade.com. I hope the summary of some of the stocks that you say you own can help you just visualize what it is we look for. Remember, again, most of the information in an organized fashion can be found in the My Secrets tab. I encourage you to start with the Ultimate Muade breakout because it is the ultimate in breakout requirements. Peace and blessings.